What's up, you guys? So we're here from OneGlanceTrader.com, and boy, do I have a video for you guys today. I wanted to share a P&L update on my ChargePoint holdings position, and if you click the title or from the title to the thumbnail, you guys will know that I'm seriously down on this position. And what I wanted to do is firstly be transparent in terms of trades that I'm in that aren't going in my direction as it currently stands. And secondly, anyone that's been investing in the market, especially over the last few months, more than likely that you have a lot of losing positions in there due to the macroeconomic stuff that's going on in the US with inflation scares, supply chain issues, all that kind of stuff. You know, stocks have, especially smaller caps, non-profitable, high growth stocks like ChargePoint, have been absolutely tanking and really impacting my P&L. But utilizing options, I'm able to um, lower that cost basis, lower that break even, buy the dip, all that kind of good stuff. And I wanted to show what the current position is and what I'm doing every single week to help improve the kind of position that we're currently in today. So if you like that transparency, all I ask for in return is that you smash that like button and don't forget to subscribe and hit that bell notification icon. So as you can see on my screen at the moment, I own a stock. If you guys are new to the channel or haven't really been following this particular session, I own now 2,500 shares in ChargePoint Holdings. ChargePoint Holdings are the market leaders in EV charging stations. And, I've talked about it in previous videos, very bullish on the EV sector, especially for EV charging. And ChargePoint are best placed in the market, not only in America but also through some acquisitions that they've done in Europe over the next 2 to 3 years. And as you can see over here, that um, the current value of this holding is 31,000 with an unrealized loss of 36.7k dollars. So that is a unrealized P&L of minus 54% if we round it up. So this position is down by 54%, and this is, again, like I mentioned inside the intro, this isn't just a fine ChargePoint stock, because growth stocks, they're all getting hammered. If you type in any growth stock, it's pretty much down 50-60% across the board. And the fundamentals of all these companies and their growth projections over the coming years are still very strong. It's the macroeconomic environment that is causing these stocks to go down, not the fundamentals of these companies. And that's the reason why, in the strategy I'm going to share with you, what I'm doing about this is why I'm still investing into this stock. And you'll see with the position, with my position history, where we started with and where we currently are today. But as it currently stands, ChargePoint is continuing to drop, and I talked about it in my last video about the indicator, and we'll show it on the screen now, of when this potential market bottom could end, and I'll link to that in the top right so you guys can check that out. It's a very interesting video about identifying market bottoms, and this indicator is very, very, in my view, very, very good at predicting those kind of situations. So yeah, it's not great, right? It's not great. No one wants to be down $36,000 at 54%. But my absolute dollar value might be bigger than most people's accounts. But this minus 53%, in certain positions you guys are in, you guys are probably seeing the exact same thing. So again, if we have a quick look at the actual chart, if we look at the chart itself, I have a cost basis of $27.88 with a break even of $23.94, and we'll go on to these figures in a bit more detail inside a second. But you can see here that since the highs of December 2020, sorry, not December here, from July time and some from February, everything 2021, everything started dropping. And I was fairly confident with this $20 support line that we had here, but in December 21, it absolutely tanked and everything is absolutely dropping, which is not what I expected to see or what I expected to happen. But And at the moment, if you look at this daily chart, you can draw a trend line right across there. And let's just do that just so we can kind of see what the situation here is. You've got this very, very steep trend line. Draw that down slightly. That is irritating me because I can't reach it. Let's zoom out so then we can. There we go. Now I can do that a bit better. So then we've got this situation here of this very steep downtrend. And until we kind of cross over this kind of situation here, hopefully this is a floor. This was around $11. ChargePoint hit a floor, came back, but now it's looking for like another push leg down. And we talked about in the previous video, don't know when this bottom is going to come, but when it does come, small caps such as ChargePoint and various other kind of heavy retail stocks, they're going to go up 10, 20, 30, 40% in a matter of weeks and months as opposed to years. So at the moment, the fundamentals of the company are sound. They report earnings in early March, so I'll be watching out for those ones. But at the moment, what I am doing is selling put options on ChargePoint and effectively buying the dip. And because obviously the cash that I've got in the account is not as much as it is because a lot is heavily invested in ChargePoint, what I'm doing is selling covered calls and then utilizing the premium I'm collecting in covered calls to then fund me selling puts to then lower down my cost basis. Now, let me walk you guys through that strategy because that's what I'm doing. I'm using the cash flow that I've generated from this particular stock since I've held it and since I've acquired more shares, and then using that premium to go sell puts to then, if I did get assigned, then I'm lowering down my cost basis. And if I'm not assigned selling puts, then I'm just bagging that put premium at the same time. So I'm kind of doing the wheel. I'm still doing the wheel on this, but I'm using my covered call cash flow premium to pay for the additional 100 shares. And because I've got a huge volume of shares, so I've owned 2,500 shares, so that's 25 contracts. You don't need big premiums per contract to start building up, and with the share price being around $11 to $13, in about 2-3 weeks I'm able to collect enough premium to be able to then sell a covered call. And if then it rises, then I just keep all that premium and I don't use it. So that is kind of where we currently are. So with the cost basis of 27.28, if we have a look at the current break even price roughly, we are we still need to go about pretty much about 88% to even get to around the kind of break even mark. So we have a quick look now at my current holdings. So I started back in July when I first did it, and the mistake I made, and I've learned from this going forward, is I heavily invested in one strike at 35. What I should have done is done 5 contracts effectively, so 500 shares at the 35, 34, 33, 32, where I would have picked up less premium, but I would have spread my risk across. And again, I made another mistake here. Hindsight's a beautiful thing, right? That 1,000 shares, or so 10 contracts at 27, I should have done 5 at 27 and 5 at 25, because again it would have lowered down my cost basis. So I'm very top heavy at the moment, so I'm about 60k over here, and below 20 I'm at 9.7, because obviously my cash shortages is getting pretty weak. So what I've been doing, as you can see, I've been buying the dip as ChargePoint's been dropping, and I recently got acquired 100 shares at $14. There, I would love to own 500 shares at $14, but we are where we are. So as it stands, I own 2,500 shares, and that's when my break even at a full cost of 69.7k. and therefore my break even is at 27.88, right? So that's where we are. So we started at 35. So if we look at this now, we start. So we started initially at 35, and we've brought it down here. So we've reduced it by $7 over time, right? Which is quite good. And now what we've got here is at 27.28. Now, throughout the lifetime of owning these shares, I have made $9,855 in premium, right? So that's selling covered calls, selling puts, whether I'm assigned these or not, I get to keep the premium. So as a return on my initial investment of 69.7, I've made 14% return, which, 14% return since July last year. So what's that? About 7 months, pretty good. But my actual investment of that 69 is down by 50%. So it's worth like 35K today. So if I was to use this to calculate my break even, this 9855, my break even is at 23.94, which is basically what we have over here. So between here and here is basically all the premium I've collected to, again, reduce down my kind of break even price. So, and that's got me that 14%. So what I've got over here on this one is pretty much every single trade, put option and call option that I've done, and then column L is the proceeds, which gets you to your 9855. So if we have a look recently, what you'll notice here is my cost basis is 27.88. And what you'll see here is I'm selling covered calls at 23, 24, 23, 19 and a half, 19. Now, this is a risk because I could get assigned the covered calls, right? So I'm doing my max amount of contracts I can at lower strikes to get more premium. And because now I'm generating volume, you can see here on a weekly basis I'm making 500, 200, 500, 875 at 25 contracts was what I did, but I did a covered call at $14, right? There is a risk of me being assigned, so I don't encourage people to sell covered calls below the cost basis. But in my basic head is, why would you buy shares above the current price when you could buy it below, when you can buy cheaper at the current price? Unless it's a dividend stock, and there's various reasons why you would want to assign the shares with dividend stocks. ChargePoint is not a dividend stock, so that is why I don't. I'm not comfortable, but I'm comfortable-ish selling below my cost basis. And as you can see over here, this was the recent one at 14, which I got assigned the put, and I've got 2 puts open expiring today, February 4th, just before market open at 11.5, and the current price is 12.59. So it's got dropped by $1, which in this market is possible, but I think I should be okay. And again, I picked up $124. So that $124 helps me. It's making up that 9.5 grand that we talked about. So if we look at, this stuff expiring, I've actually rolled this contract out this week, so the that's not showing in this. But again, $1,000 that I've made this week, right? And the stock's trading at 12. So next week I would have made enough premium to then go sell another put on this at 10, at 9, at 9.5, whatever. If it keeps going, and I feel like I'm not utilizing my own initial investment cash. This is just cash flow that I'm kind of bringing in here to bring down this break even. I'd love to get assigned another couple of hundred shares at the 12s and stuff, because I do think ChargePoint is trading below its fair value at the moment based on the growth targets that this company is going to do. That might change based on guidance as we look out into March when they release their earnings. But as it stands at the moment, I'm happy selling covered calls, picking up anywhere between $500 to $800 a week, and selling puts, making another, $50 to $100 a week. So roughly anywhere between $800 to $1,000 a week, and every 2 weeks, I would have built enough cash flow to then sell another put. Right, so that is what I'm doing here. I'm cash flowing my buy the dip strategy, and that's the piece there that, if you can sell at your cost basis or higher than your cost base for a decent amount of premium, and then use that premium to then build up over the coming weeks or months to allow you to sell another put to quote unquote buy the dip in the particular stocks. So that's the strategy that I've been doing, and I've been doing that now since it's dropped kind of below the $20 mark. So, unfortunately, I've been assigned at the 19 and at the 14, and between 14 and 20, I'm hoping that I can pick up another 3 to 500 shares in ChargePoint as it continues its way back up to, again, at least to be able to sell covered calls at my break-even point at a minimum. Because at the moment, as we saw, we're so far ahead. It was at around like 80% away from kind of our break-even point at the moment. That the stock needs to jump up for me to sell calls against it. So if I wasn't doing this, then I would just be holding at the moment, as you would with any investment. So I just wanted to share that with you guys, and I think it's, we are all in this position together. So comment down below on stocks that you're behind on, and more than happy to do more of a deeper dive into stocks that that you guys own or that you guys want to talk about. But I just wanted to share this with you guys to say, look, I'm in this position. The fundamentals of the company, in my personal view, haven't changed. If anything, I'm getting this stock at a discount, and I don't mind holding this stock for 2-3 years, right? I don't need the money today, and that's why I'm willing to ride out this market, collect the cash flow, buy the dip. And again, the more shares I own, the more covered calls I sell. Because I've got more contracts, I make more money, I make more cash flow. So, it will take time, but eventually, there's only so low ChargePoint can actually go in the market. But, if I'm adding like 500 to 1,000 a week, you know, so if we just let's just work this out quickly, just to humor ourselves. So therefore, at the moment, there's 59 grand. If I divide, let's say I make 800 a week, that is 75 weeks. So do that divided by 52. So it's going to take me 1.4 years to build up enough cash flow, right, to make back my 69,000 based on an average of 800 a week. But do I expect ChargePoint to keep dropping for 1.5 years? No, I expect ChargePoint to go up. So that gap then is going to start shrinking, as well as my covered calls as I accumulate more and more shares. So my goal here is to make 1,000 a week within the next 2 to 3 months consistently. So then that would be 59 weeks, so just over a year to recoup back my initial investment. So I'm going to keep doing that, and eventually I will get out of this position. I will probably try to keep some of these shares as we ride it up, but I think I'll be honest, having the 69 grand sitting in ChargePoint is not the best use of this money at this point in time. And again, this was a wheel trade that I didn't mind holding the stock, and I'm comfortable buying the dip. Going back to the wheel strategy is making sure that you invest in companies you believe in the long term, because if this happens, which it is happening, I'm not selling at a loss, right? Unless I actually get assigned the shares early, but we'll cross that bridge if and when that comes to it. So, like I said, I really hope you've enjoyed that. Check out my other videos around ChargePoint, which are on the screen now, and some leap options and all that kind of good stuff. And I shall see you guys in